But our next guest sees the office sector as a bright spot in certain regions. Let's bring in Nuveen Real Estate Global CIO and Head of Investments, Tripp. Welcome. So I guess the fear is that with rates stuck as high as they are, a lot of office landlords just going to hand over the keys to regional banks because their payments are going to go too high when rates reset. You think that's not going to happen, or it's only going to happen in certain regions?
I think it will only happen in certain regions. And thanks for having me today. Happy to be here. So what we're seeing in the U.S. obviously is a lot of distress in office, both in public REITs and on the private side. But that story is layered, and it's layered internationally as well. We're seeing very, very strong demand and usage for office in places like Paris Central Business District. We're also seeing in Asia Pac, where culturally it's really, really important to be at your office every day for career progression. Places like Singapore are actually transitioning and repositioning hotels into office. So the complete opposite from what we're seeing in the U.S. Even here in the U.S., the story is layered. Hate to paint a binary lose or win brush where anything. But looking at a market like New York City, one of the largest office markets in the world, we have 90 million square feet of vacancy. But you peel that onion back, and what you'll find is that newer vintage product built 2015 and later is actually only at a vacancy of less than 5%. Miami is another example where we've seen tons of population migration, obviously corporate relocations, as you all know. Miami office rents continue to outpace any historical norms, continue to peak. So there is value in office. You just need to know where to look.
So are we going to see a fire sale in an old office then? How should investors think about, by market and by age of building, what's going to happen?
Well, you know, investors have been waiting around for distress. I know a lot of large investors, they want to pick their moment. They want to invest in distress. Distress is here in office. What creates a distressed market is, of course, something is selling that no one wants, right? And so within office, there will be foreclosures. There will be continued distress. But however, if you look particularly at a public to private arbitrage, some of these coastal gateway office REITs are trading where they were in the early 90s and trading at 80% discounts off of peak. So again, I do not think there's a fire sale, but I do think there's a lot of distress. However, smart investors can take advantage of it.
Interesting. We were just showing a graphic up on our air of different opportunities in real estate, and one of them was self-storage. We don't talk about it very much. This got my attention. Why do you think this is compelling?
Self-storage is compelling for a few reasons. You know, number one, it's not institutionalized quite yet in the U.S., which means it's been a very fragmented, localized business. There is an aggregation play. It's easier today than it was 10 years ago because of technology. So that is something that large institutional patient investors can take advantage of. You can go in at stronger yields than other real estate. You can aggregate. You can sell portfolios at compressed yields. In addition, it's non-cyclical. It is not tied to GDP. It is not tied to the broader real estate market. What we have seen is self-storage outperform any other real estate sector 80% of the time over the last 10 years. So definitely not a subsector to ignore.
Is it a similar situation where healthcare is concerned?
Absolutely. So healthcare, a little bit of an easier story to wrap your mind around. We all know the story here, aging population. By 2060, 1 in 4 Americans will be over the age of 65. That's compared to 1 in 6 Americans today. What that has translated to is an increase in healthcare spending. The estimate is that healthcare spending will continue to increase at a pace of 5% per annum through 2030. What that's resulting in is a lot of demand for medical office. And lastly, I would say the tenancy within medical office is really, really high credit. It's doctors that invest a lot of money into their space. They stay there for a long time, typically their entire career, 20 to 30 years. And that is less costly for a landlord. So very, very sticky revenue stream with downside protection.